So I took a gold long for 3 risk reward, and when I thought that I hit my take profit, I looked at my phone and noticed that I hit my stop loss because of spreads. So in this video I'm going to be explaining the trade itself and also what spread is and how I wanted to avoid it but it didn't happen. First of all, let's analyze this trade by going over to the weekly time frame. On the weekly, you can see overall we're very bullish, so longs overall are very clean, especially when you're trading swing. So then you can also see that the order flow is bullish. We tap this demand zone, and from there I'm just looking for upside to break this high again. So going over to the daily time frame as well. As you notice, I'm also not looking at the structure because overall it's just bullish and overall we want to trade up higher. So looking at this zone, this could again push us up higher, and then inside of this range I noticed that we grabbed some liquidity at these lows and then over here, and then we created some internal bullish order flow. So after grabbing liquidity, we then created this demand zone, we tapped that demand zone, and then we got a fractal break in towards the upside, creating another demand zone and then another one. So what were we doing? We were creating bullish order flow. So right here is where I took the long setup, because from those demand zones I was just expecting to trade up higher. As you can see, also that is what happened. So going to the 4-hour time frame, again you can see that we're bullish, but that doesn't really matter. You got the upside move, then you have the pullback, and now I'm just looking to trade towards that swing high, which we were very close by. So then from that point you then generated a bullish order flow. You grab liquidity, moved up higher, grab liquidity, moved up higher, and every one of these demand zones are getting respected. So if I then look at the recent price action, we then can see that we gotta move up, created a demand zone, and we perfectly tapped that, creating this channel as well. And then I'm just looking for a big boost up. So then again we create that bullish order flow, and over here I got a wake. So let's show that. So basically after this break you have this demand zone now in control, and we do not expect that demand to break because we have bullish order flow, and we just expect to respect that bullish order flow. Especially on gold, this is a bit better to do. So what is this called? This is called a continuation trade in our strategy, and with gold it is just better because it's more impulsive, more aggressive, so it follows that order flow really hard. If this was any other pair like Euro AUD, I might have not taken this trade because it is tricky. You could see some swipes before moving up higher. But overall gold is very aggressive, so these continuation trades on gold are definitely very clean. So then I was trying to target these highs, and I know we could also try target these highs as well, but overall these highs seemed fine to target. So what then happened is that we had that break up, creating this demand, then we had this break creating this demand, and then over here we were during Asia breaking those highs and then getting a pullback down lower. The 4-hour fractal is still bullish, with this being your low and this being your high, but we managed to grab some internal liquidity on the 1 hour. Then we had an Asia low which needed to be swiped, but first we gotta move up. We then got a move down swiping Asia, which is very good because now you're creating a strong low, and then we get the fractal break in towards the upside over here. Let's use a replay mode for this one so that you guys can see. So again, let's see, you have Asia, you move up higher, you then move down lower, breaking the low, swiping all of the early buyers, then getting a fractal break in towards the upside. Now you have this demand zone where you would want to trade up higher from. So from that point you're now ready to kind of trade up higher because you've created a strong low and the fractal is bullish. The 4-hour fractal is also bullish, and you managed to grab some 1-hour internal liquidity. So I entered over here, stop loss underneath the low, and I'm trading up higher. So the stop loss is not just underneath the low. If we buy, the stop loss is 1 pip underneath the low, or that's at least what I did before. And then as you can see, my stop loss never got hit, right? So only the price action after is where I was in the trade. So I put my stop loss underneath this low, but this low managed to kick me out and hit my stop loss. And the reason is spreads. So price is not really there, but price is there. So on the chart it doesn't show that price is at your low, but in reality it is. And that's with spreads, so that's why we usually do 1 pip below, but in this case it was not enough. So that's very unfortunate, because otherwise, as you can see, we would have hit 3 risk reward. So overall, yeah, we hit stop loss, but I definitely think we're in the right direction. As you can see, we hit our take profit. So I'm just going to review this one to see what did I do wrong. Maybe on gold I need to do 2 pips because there are maybe higher spreads or something. So I'm going to review this again. Look at your trades, look at your data, and try to evolve from that. So that's what I'm going to do with this one, and I hope you like this trade. It's a very clean trade, continuing up higher, and I hope you guys can also try to do this one yourself, kind of continuing the trade overall with the order flow, and that's sometimes a very clean and fast trade. So see you guys in the next one. Bye.